With the recent collapse of FTX, a lot of trust in centralized exchanges has gone, and so degenerate gamblers are looking for new places to go ahead and throw away all of their money. And so in today's video, we're going to take a look at a number of decentralized exchanges out there. These are some of my favorite, and we're going to look at one from each chain. And so the first one we're going to take a look at is dYdX. So dYdX has its own Starkware ZK rollup. So this is a layer 2 that's built on top of Ethereum, and so it offers extremely fast, extremely cheap transactions. And so if you actually want to get onboarded onto dYdX, you're going to have to go there from Ethereum mainnet, or I think you can even go from Arbitrum as well, but I think the main place is Ethereum mainnet. And you won't have to pay exorbitant gas fees to actually get started on dYdX. If you're a first-time user and you bridge over there, they will cover your gas fees for doing so, which is quite nice from dYdX. So dYdX is an order book Dexs. So if you just take a look here, you can see all of the orders in the order book, and it's quite nice and easy to use. And so the collateral asset here is USDC. So you're going to have to bridge USDC over into dYdX. And they have a number of markets that you can actually go ahead and trade. So as you can see here, Ethereum, Bitcoin, Polygon, Dogecoin, Solana, most of the economically relevant layer 1 tokens you can trade on dYdX, as well as a lot of the blue chip DeFi tokens, so like Sushi, Curve, Yan, so on and so forth. Maybe 30 to 35 markets to trade. So what the cool thing about dYdX is that you actually have gasless transactions, and they go through really cheap as well. And that's why I think out of all of the decentralized exchanges I'm going to talk about today, this one feels most like a centralized exchange. And we'll do a market buy, so place market order, and it went through just like that. No having to mess around with any MetaMask, paying gas, having to manually approve the transaction, so on and so forth. It just went through. And then we just do this again. And it only cost me 5 cents to do that trade. And so the cost of actually trading on dYdX is similar to what you might see on other centralized exchanges. A few more cool things about dYdX is that you actually get paid to trade there. So as you can see here, I'm estimated to receive 33.82 dYdX at the end of this epoch. So this is every 28 days. So every 28 days, dYdX gives out 2.8 million tokens to users of the dYdX platform, and you get allocated dYdX tokens depending on how many fees that you have actually generated. So I've generated about $69.61 in fees, and they're giving me 33.82 tokens at the current market price of dYdX of right now, which is about $2. I'm basically only paid $1 in fees if I were to sell those dYdX tokens. However, there is another benefit to actually holding your dYdX tokens, and that's a fee discount. So if you hold over 100 dYdX tokens, you actually receive a 3% fee discount, which is quite nice. And so I just traded here a couple months, received dYdX tokens for free, and now I get a fee discount as well, which is awesome. One negative that I will have to say about dYdX is that if you are American, you are going to have to use a VPN in order to use it. For some reason, they block American citizens from using dYdX, so you just have to keep that in mind. Now, the next Perpetual Futures Dex I wanted to talk about is GMX. So GMX sits on Arbitrum and Avalanche, but I'll be taking a look at the Arbitrum based one for today. And so the way that GMX works is that you're trading against a pool of assets called GLP. Now GLP stands for the GMX LP token, and so this is basically a pool that's filled up of Ethereum, Bitcoin, Chainlink, Uniswap, USDC, Tether, DAI, and Frax. So whenever a trader makes a profitable trade, GLP takes a hit, but whenever a trader makes a losing trade, GLP then makes money. Additionally, holders of GLP make a portion of fees generated from swaps and leverage trading on GMX, which is pretty cool. And due to the pool mechanism that they have going on GMX, you're only able to trade Ethereum, Bitcoin, Chainlink, and Uniswap on GMX for right now. but pretty soonish. I want to say by the end of this year, they're going to introduce synthetics, so you'll be able to trade a bunch more different cryptos, potentially Forex and stocks as well. The last thing that I wanted to mention is that if you have any GMX tokens, you can stake them and you receive 30% of the fees generated from swaps and leverage traded. And this is given out to you in either Ethereum or Avalanche tokens, depending on whether or not you are on Arbitrum or Avalanche when you're staking your GMX tokens. So that's awesome. The next Perpetual Futures DEX I wanted to talk about is G-Trade from the Gains Network ecosystem. So G-Trade lives on Polygon. And the way that this works is that you're trading against a DAI pool. So all of the assets that you're trading on here are all synthetic assets that you are trading against a gigantic pool of DAI. So it works similarly to what we saw with GMX. If traders make money, the DAI pool takes a hit. But if traders lose, then the DAI pool makes whatever the traders lost, as well as any fees generated from the traders as well. And what's awesome about G-Trade is the number of assets that you can actually trade here. So as you can see, the top 3 assets here, Apple, Bitcoin, Euro. So you can trade crypto, stocks, and Forex with a tremendous amount of leverage as well, which is pretty awesome. So as you can see here, most of the cryptos that you'd want to trade, BNB, ADA, Algo, stocks, AMD, Boeing, obviously you had Apple as well as most of the major Forex pairs here as well. And the last thing that I wanted to mention about Gains Network is the staking pools that they have here. So if you have any Gains tokens, you can stake them in the GNS pool to receive 8% APY. And so the fees generated from the traders partly go to this Gains pool as well as to the DAI vault here as well. And so you can stake DAI into Gains Network for 19% APY. So if you're interested in some stablecoin yield farming, this might be a place to go for you. And you can also buy insurance on your positions here as well, which is really cool. But just remember, whenever traders win, you take a hit. Whenever traders lose, you win. But statistically over time, the house always wins. And so you wouldn't have to worry too much about that unless someone goes on like a major hot streak. And so the next Perpetual Futures DEX that I wanted to speak about is Drift. So Drift is live on Solana. In fact, it's on its gated mainnet launch. This is for Drift 2.0. Drift 1.0 shut down sometime, I want to say in May time. And so the developers have been working hard in order to get a V2 out, and it's finally out. But it's gated to people who have the alpha NFT. And so not everyone will be able to use it right now. There's a chance that if you're watching this video in the future, it will be open though. And so just note that because it's on its gated, initial launch, there aren't going to be the amount of features that will be there in say 2 to 3 months time. So how do trades actually go through on Drift? So you have 2 methods. You have the internal AMM, as well as a just-in-time auction. So let's read a little bit more about these JIT auctions. So the JIT auction is a supplementary liquidity mechanism that allows market makers to provide a just-in-time liquidity. So when a user, a taker, submits a market order, this automatically triggers an individualized Dutch auction with a specific start price, end price, and duration. The auction forces market makers to compete in order to fulfill the user at a price better than or equal to the current auction price. If no market maker steps in after the initial window, which is about 5 seconds, the user can then be filled by Drift's AMM. And so you have 2 mechanisms there for actually getting your trade to go through. Some cool things that Drift is going to actually introduce is being able to use not only USDC but Sol as collateral here as well. And all deposits that you make to Drift automatically start earning yield. Additionally, they will be implementing spot margin trading here as well. And so you'll be able to deposit assets into Drift, lend them out to margin traders. I expect Drift to have a lot of deposits from yield aggregators in the future as well. The next Perpetual Futures DEX that I wanted to speak about is Perpetual Protocol. This is one of the OG DEXs out there. It's been around for a while. So Perpetual Protocol is on Optimism. It initially was deployed to XDAI, but they decided to move over here, and it's seen a lot more usage since then. And so how do trades work on Perpetual Protocol? So you're trading against Uniswap v3 concentrated liquidity AMMs on Perpetual Protocol. So if we click here on pools, we can see there are individual pools for each asset that you can trade here on Perpetual Protocol. So you can see there are quite a few assets, a few different DeFi tokens, Aave, Ape, Link, as well as most of the relevant layer ones that you want to trade, Sand, so on and so forth. Another cool thing about Perpetual Protocol is that you can use USDC, ETH, Frax, or Optimism tokens as collateral to trade against. But just going back to how trades are actually routed through Perpetual Protocol, we can just take this Bitcoin pool, for example. So if you provide liquidity in this Bitcoin pool, you're actually able to earn perp tokens as well as Optimism tokens for providing liquidity. And in order to do that, you click here on add liquidity. And so you have the simple LP user interface here and the advanced one. The easy LP one, you're just marking down a range of which you would provide liquidity in, and in the advanced one you can manually input numbers here as well. I think that if you're not a professional market maker or someone who has a lot of experience with providing liquidity in concentrated liquidity AMMs, this probably isn't something for you. From my understanding, most Uniswap v3 LPs lose money, and the only ones that actually make money are the advanced market makers out there who use algos in order to keep liquidity within a tight range. If that's not you, it's probably not worth it for you to become a liquidity provider, but it's something that's there for you as well. So I wanted to end the video here, but I thought, why the hell not? I'll just cover this last protocol, and that's Pancake Swap. So most of you probably didn't know this, but Pancake Swap had its own perpetual futures Dexs. And so if you insist on using BNB chain and you want to trade perpetual futures, Pancake Swap is definitely the place to go. You can trade Bitcoin, ETH, ADA, Doge, Sol, XRP, DOT, and Sand here. And so that was it for this video. I hope you enjoyed it. Links to all of these perpetual futures Dexs will be in the description down below. Thanks for watching, and make sure to subscribe for more videos like this one.